Welcome to PFI Talks, the podcast brought to you by Prague Finance Institute. I'm Lars Rosek, your host, and it is my pleasure to welcome Dr. Marc Faber, a renowned international investor. Mr. Faber has a PhD in economics, and that may explain his inclination to write a lot, because he's an author, editor, and publisher of the Gloom, Boom, Doom report, a must-read for investors with long horizons. Hello.
Yes. Good afternoon.
Thank you. Yeah, it is indeed late afternoon in Prague and very late in the evening or at night in Thailand. So thanks for finding time to talk with us from so
it's
far
a pleasure.
away.
It's a pleasure, and I want to tell you what I'm very pleased about. When I finished my studies, the final exams, that was in 1964.
Mm-hmm.
No, sorry, in 68.
68.
In 68, I decided to go on a holiday to Prague.
Uh-huh.
And I arrived in Prague on August 20th.
On 20th. So on the eve of the invasion.
I checked into a pension. I'm in a small apartment building where they let out apartments, a family. And this was next to the broadcast building.
So it was in Vinohrady. Yeah, it was next to the Czech radio.
When the invasion happened in the night of the 20th to 21st, the Russian tanks were all around the broadcasting building and blocking my car. It looked so funny, but it was a very interesting experience.
But it was actually pretty tense. It was also pretty tense at the time on that street. There was a shooting even taking place in front of that radio building.
Yes, there was some shooting, but I didn't see any, let's say, bloodshed. But there was shooting. And the next day, of course, everything was tense already. In the night of the 20th, I had gone to a nightclub and I came out. And I saw planes after planes flying over Prague, and I asked someone, what the hell is happening here? So he told me, oh, the Russian army is invading. So I thought, in those days, I was adventurous and curious. I drove my car towards the airport, and then I saw the tanks rolling in. So I turned around and drove back to the city. But it was, as you say, a tense situation. But I have to say, towards me, the Russian army was very nice. I mean, when I wanted to move my car, they moved their tanks so I could drive out. And when I drove back in, they moved the tanks again so I could drive into my parking lot.
Given the war in Ukraine, those sort of like ghosts of 1968 has sort of been brought up again and in living, so to speak, because I mean, almost that part of Czech history might have gotten slightly sort of covered in the sort of a mist of history, but now it's sort of back on everybody's sort of mind. Well, this is
sure.
This is actually really terrible. But if I can sort of pivot using this sort of a very famous term now, seems to be into the main subject of our conversation, and that's investment. I mean,
correct.
I've been following you and reading your report, and you're Swiss. You have lived in Asia for quite a long time, in Thailand in particular, and you have invested in many countries. So my first and basic question is, what is it like to be an international investor who is active in so many different markets at this particular time of history when inflation is spiking and there are rising geopolitical tensions? What do you do to get a return and protect your assets, if you can protect them, actually?
Yes, this is a very good statement. If you can protect them. And I think in the world of investment or in the world of observing events that occur, we have to realize that there are cycles. There are war cycles, and these war cycles have been described in the literature for centuries already. And then there are cycles of business, that you can already read about in the Bible, about the 7 fat years and 7 lean years. These are not inventions. This is a fact that the climate has changed, and from time to time there were droughts, and from time to time there were floods, and so forth and so on. So we have to look at the world and say, well, in what phase of the cycle are we? And in my opinion, we had a phase after the Second World War, which was largely peaceful, because we had the Korean War and we had the Vietnam War. And as you know, we had recently the aggression of the US into Afghanistan, Iraq, Syria, Libya, and so forth. There's a very strong pattern of aggression by the Americans during the 1990s and after 2000, especially after 9/11. And we have business cycles. We had an expansion that was very strong in the United States and Europe after the Second World War. And then what happened in the early 80s, after 1978 precisely, is the opening of China. So you have the opening of China, and initially it didn't have much of an impact, because in China it was an experiment and there were hardliners that didn't want to open. Deng Xiaoping was a revolutionary. But anyway, after 1987, 88, we had Tiananmen Square in 89, but in the 90s, China took off. And after 2000, India took off. And the Soviet Union fell apart in 89, as you know. And then a lot of countries moved from the socialist model into the capitalist model and free markets. And this breakdown of the socialist communist ideology was a huge step forward for the world, in the sense that never before in the world was there so much prosperity and so few people that were impoverished. The poverty rate everywhere in the world went down. And I mean, I just mentioned to you that I went in 68 already to the Czech, at the time, Czechoslovakia. I mean, one thing that young people don't realize today is the huge difference in the standards of living of people who lived in the Western world under the capitalistic system, under free markets. Free markets do not exist, but relatively free markets. And the poverty level that existed in China, in Eastern Europe, in Russia. I went to Russia in 80, 81, and also in China. They were lining up at markets in Russia, lines of people to buy rotten apples and rotten potatoes. In a free market economy, this does not happen. Mm-hmm. And, you know, we have a socialist wave in Europe and in the US. These are people, they don't understand that the socialist model, the planning economy, state ownership is a disaster for the economy. You know this yourself. When you have a house yourself, or you buy a car yourself, what do? You look after it. And if someone lends you his car, or you rent a car and the car is insured, you don't care about, you know, how the maintenance is. So people look after their own interest the most. This is human nature. This is instinct of animals already, the self-preservation instinct. That is the basis of capitalism. Mm-hmm. That's why it's been relatively successful. I'm not saying it's a paradise. Capitalism leads also to wealth inequality, and this has been described by the economist Schumpeter.
Mhm.
But you understand, Schumpeter is not an economist that the Americans and the Anglo-Saxon recommend young people to read, because he's not an Anglo-Saxon economist.
Well, the Economist.
Originally, he was from Germany, but he went to America. But he's one of the great economists, aside from, I mean, I don't believe in Keynes. I don't think he was a great economist, but he's the economist that models follow.
Mm-hmm. So, but I mean, going back to the cycles example earlier said, I mean, if we go back to Bible, we have the 7-year rule. You know, the 7 year, 7 years of feast and 7 lean years. You think we are entering the phase of lean years? I mean, that the party is over?
It's complicated, and I don't think in today's world of money printing that it's very applicable, because through money printing, you can create a money illusion, artificial wealth for a while, and this goes on for a while, but then it distorts your economy to such an extent that the penalty at the end is very high. We are in the penalty phase. We had expansion of asset values. You know, the bond market has been in a rallying phase between 1981, September 81. Treasury bond yields in America yielded more than 15%. Mm-hmm. And we went down to essentially 0.5% in May 2020. Since then, we're up to now over 4% on the 10 years. And so forth. So you understand, with money printing, you can extend a lot of things. We've been in bull market for stocks essentially since August 1982. Mm-hmm. August 82, the market was no higher than in 1966. And inflation adjusted in the US, we were down 70%.
So what will be your outlook for, let's say, the next 12 months? Are we really in the situation of some sort of a reckoning moment that unless the inflation is really stopped, the cycle, the spiral, there will be a moment of reckoning, because values, and that, as you refer to it, the illusion of money, the illusion of wealth, that's actually going to be deteriorated.
Yes, I think so. I mean, I tell everyone, let's say we have a bull market, and stocks go up, and real estate goes up, and bonds go up, and commodities go up, and you sit there with your portfolio and you make, say, a 10% gain, but the stock market index goes up 40%, and the real estate prices go up 40%, and you sit there with your 10% gain, and you think you're like an idiot, because relative to your neighbor and relative to people who bought the meme stocks, you're behind, you understand, with a 10% gain. Now we are in an environment where asset values are coming down. And I want to explain something that is important, especially for your student. Normally, and I say again, normally, whether it was in the crash of 1929 to 32, or in 70 to 71, 73, 74, 81, 82, in Japan after 89, and after the Asian crisis and so forth, in 2000, 2001, and in 2007, 2009, during the great financial crisis, stocks went down, but bond prices rallied. Mm-hmm. Treasuries rallied. This time around, the diversification, stocks, bonds,
yeah, 60 to 40%, yeah.
60, 40. This doesn't work. The bond market has been slaughtered. Mm-hmm. The TLT ETF, this is the largest government bond ETF in the US, The peak was in May 2020 at 170, and we're now down to something like 96, 95. The low was 92 recently.
Mm-hmm.
The Austrians, they issued a bond, 100 years.
Yeah.
And it performed very well initially because the coupon was 2.25%. So, but that bond has been cut more than in half.
Yep. Yeah, and they did issue it in 2018, if I'm not mistaken.
Correct.
Yeah. So, where does one hide? Where does one sail into where does one find a safe harbor?
Yes, this is the point I wanted to make, but I forgot to make it. The safe harbor is that if everybody drops in value by 50%, you are only down 10%. You understand?
Yes. So
you have to be prudent and avoid the most popular sectors during the bubble. So what was the most popular sectors during the bubble? FAANG and FAANG related stocks, Facebook, Amazon, Netflix, Google, Apple, and so forth. And the semiconductor stocks, these are the sectors you want to avoid. You want to avoid the meme stocks like AMC and GameStop and anything that is fantasy that didn't have any earnings, but the illusion was there. So you understand, there's a lot of myth in a bubble, and there are many books that have been written. I want to tell your students one of the best books about bubbles is actually, let me see. First of all, about psychology. You know, this is a very good book about myths and manias, extraordinary popular delusions, and the madness of crowds.
Uh-huh. Who's the author?
It's written in 1815, more than 200 years ago, but it has very good observations about the alchemists, about the Crusades, things that are unusual. Barbara Tuchman, the historian, she wrote a book, The Follies of History. History is full of madness. Like Hitler thinking he could walk into Russia and just take the country. And then the other book that you should read about manias and what happens, this is very interesting, in the cycle of manias is here. The book is called Manias, Crashes and Panics. Can you read it?
Oh, yeah. Kindleberger. Of course. Charles Kindleberger. Yeah, that's classic.
I read it from time to time and look it up again.
Yeah.
Because it's interesting that if you can learn one thing from history, it is that people have never learned anything from history.
I'm very glad you brought actually Charles Kindleberger. I believe there's going to be, I think, the 7th edition of this book coming pretty soon, because that book is still in print. And but he has been a big, advocate of a global currency. And obviously, I mean, since World War II, the dollar has become a global currency.
We were friends.
Oh, you were friends? Oh, gee. This is amazing.
Yeah, because I have a collection of the first edition of Economists and Socialists and so forth. I have also Karl Marx's first edition and Lenin's, and Trotsky's first edition is very rare. And the other book that is relevant is about mass psychology, is The Crowd.
Yes,
by Gustave Le Bon, he's a Frenchman. This very interesting book.
By the way, talking about Charles Kindleberger.
The people at the Federal Reserve will never quote him because everything that they messed up, in good English, you say fucked up, is written in Kindleberger's book.
Yep. Yeah.
The people at the Federal Reserve, I have to say, including the ECB, are the most incompetent people I have ever encountered in the field of economics.
Well, on that note, what do you think about Chairman Jerome Powell, who nobody really knew whether he was really into like turning the ship and going into the tightening cycle until he gave the speech at Jackson Hole in August, and still people didn't believe him. And at the last meeting of the FOMC, he actually came out, that the last meeting in October, he came out and then he said, listen, I'm not pivoting. You are fooling yourself. I'm actually going to do what I said I was going to do, and that's tightening interest rates. I mean, do you believe him? Do you think he can really do that and turn the ship?
My sense is that the model we have to look at, and there's a book by Sidney Homer, The History of Interest Rates, and it's in there quite clearly explained how in the 70s interest rates rose. And I give you some figures just that you understand what it is about. Inflation accelerated in the late 50s very little, but after 65, after the US started the social programs, guns and butter, guns for Vietnam and butter in terms of social programs under President Johnson. Nothing worked, by the way. The social programs have proven to be, by and large, a disaster. And even the black people, the black leaders will tell you about it. They managed to destroy the black family with these social programs. Anyway, interest rates began to rise in 68, 69, and they reached a peak in 69 on the 10 years note of over 9%. Then they dropped into 71 to a little over 3%. Then they went up in 73, 74 to over 12% on the 10 years note. And then they dropped to around 4.7% in 75. And then they went up again and peaked out at over 15% in 1981. What I want to say is that inflation, you can have a burst, okay? You go up in the rate of inflation, and then there are cooling measures. When you tighten monetary policy, then inflation will come down and the interest rates will come down. And then what the Fed will do is they will go to the world and proclaim, you see, now we tightened monetary policy, we brought down the rate of inflation, hurrah, and then they print again. That's what they did in the 70s. But to be fair, in the 70s, they always accuse Arthur Burns. Arthur Burns is a nice economist, you know, he was a business cycle guy. He'd written a book measuring business cycles.
This is great, going to a library.
It's measuring business cycle. And so he increased interest rates, to be fair to him. As I said, in 74 to over 12% on the prime rate. We are in the US with an inflation rate of over 9%. We are still at 4%. Fed fund rate, 3.75 to 4%. In Europe, we have a criminal. She's called Lagarde. She, a year ago, when there were clear signs that prices were going up, she stood there and said, oh, it's all transitory. She's arrogant and incompetent. I mean, your young people who are studying economics, what do they think? What will happen to inflation when you have interest rates still this low? Interest rates, according to the Taylor rule, there's also a friend of mine John Taylor. He's
Mm-hmm.
at the University Stanford in San Francisco.
Wasn't he considered to be
Yes,
the
he was
chairman of FAANG?
considered, but he's not a money printer, so they didn't take him.
Mm-hmm. Yeah, Trump needed money.
Trump, he took Powell.
Yeah.
He took Powell, yes, of course, because Powell is a money printer. He's a bureaucrat. You know, he's a guy who, like other government officials, they sit in government, they mess up something, they still get their pensions, they still get their salaries, everything. You know, in the private sector, if I mess up something, I lose my money. I also lost years when I lost a lot of money, and there years when I made money. But I don't take money if I don't lose money. If I make a mistake, I'm paying for it.
But I mean, the way you describe it is like it's a pretty gloomy. Well, it's a fitting description for someone writing a gloom, boom, doom report. But it's a gloomy picture of where those big reserve central banks can take us in the future. Do you think that besides Fed, the ECB, Bank of Japan, Bank of England, or SNB, Swiss National Bank, are they going to be still holders of global reserve currencies going forward?
I suppose so, but we don't know how the world will look like. The Americans, they think, this is the view, and this is where we need to address also geopolitics. The Americans, they think it is best for the world that America runs the world, because America is superior, and because America is better, and because America has more military. And so they didn't like Putin, and they don't like the Chinese, and they don't like the independent countries we had before the breakdown of communism. We had an association of non-aligned countries like Bangladesh, Indonesia, India, were in the non-aligned countries. These were sort of neutral countries. Now, America is not the typical American in the Midwest and in New York also. He doesn't care about Ukraine or anything. But the neocons, this is a group of people, they think that America should rule the world, and America should introduce democracy here and there and everywhere. But this is not the view of other people. You understand? Look, which countries function the best? Small countries. Norway, Denmark, Sweden, Finland, Switzerland. Big countries is very difficult to manage.
Yeah, and it seems like in the US, there's a lot of polarization among individual states of the Union.
Well, it varies. We can measure the polarization, and it's increased. I mean, I recommend your young viewers to occasionally watch a debate, because it's interesting. The politicians in America in a debate, I just watched one with a lady called Dixon. She's quite good looking, and the Gretchen Whitmer in Michigan. Mm-hmm. They make a statement, the next politician rebutes and says, "You're a liar." They can't agree on the facts. You understand? It's very difficult to have a discussion with anyone when they don't know the facts.
Yeah.
I mean, I read a book, Hannah Arendt. Mm-hmm. She wrote about the totalitarian state. How do you move from, say, a society into a totalitarian state? What preconditions are there? It's very interesting.
I know.
I think we're going to move from democracies into totalitarian states, or socialist dictatorships, or fascist dictatorships. But I think democracy, such as we had in the last 50 years or so, that is over.
So that's almost like the picture that, maybe we are, if we were to liken it to any period in the 20th century, it's like the 1930s.
Maybe worse.
Be worse.
I don't know. At my age, of course I care, and I joined an organization now and an initiative, because in Switzerland we can launch initiatives for the neutrality of Switzerland, because in Switzerland there's
Oh,
a
you mean
group
the
of people.
referendum initiative, yeah?
Yes, and I want to maintain or incorporate in our constitution more solidly the fact that we should be neutral.
It's
Because
not
we, as a
solid.
small
It's not
country,
solid enough. I mean, from the outside, Switzerland is viewed as a neutral country. Period.
well, we're less neutral than we used to be.
Mhm. So you wouldn't be able to look into eye to eye or counterman running the World Economic Forum in Davos.
Well, I think it's a despicable group of people that mix power of business, power of the media, and political power. I mean, look, when I grew up in the 50s and so forth, at school, at university, at home, everybody said, we are a democracy and that's why we're free. What democracy did they have in Canada when Trudeau went after the truckers? They had a peaceful demonstration. They were banned and treated like really terrorists. When Trudeau supports the BLM, Black Lives Matter, for me, every life matters. Your life matters. The Chinese life matters. The Ukraine matters. The Russians. I'm against war.
Mm-hmm.
And one of the great philosophers of the 20th century, Bertrand Russell, he stood up and told the British that they should become neutral and not dream of an empire. He was very opposed to the First World War, but the Second World War he kind of half-heartedly supported, because he thought that Hitler was a very vicious and bad person.
If I may just go back, sort of circle back into our sort of investment theme, and we haven't touched gold or precious metals, because we can agree on that the 40-60 diversification rule for a typical portfolio may no longer work as it used to. But what about gold and precious metals? They haven't really performed that great.
No.
Lately.
Let's put it this way. My view is you and I and your viewers, none of us knows how the world will look like in 5 years' time. What will the people in the US come up with next in terms of a vaccine and so forth and so on? We have no idea. They locked us down. They bankrupted many small businessmen and enriched the rich guys with money printing. Now it's payback time. But what I want to say is this. In absence of knowing, you want to diversify. So as an individual, you look at different asset classes. You want to own some real estate. You want to own some properties in cities and in the countryside. You want to own some stocks. You want to own cash and bonds. And you want to own some precious metals. Then there's the question, but again, not everybody can do that. You want to diversify. You don't want to own everything in Czech Republic, but you want to own maybe something in America or Canada, maybe something in Asia, in Vietnam, in Hong Kong, Singapore, maybe something in China and something in Russia. You understand? You have to diversify the asset base. The sovereign states, maybe in the Anglo-Saxon axis, they will say, well, you can't own gold anymore, as they did in America in 1933.
Mm-hmm.
So we'll take your gold away, and you will take your bitcoins away, and so
Yeah.
and we'll tax away your properties.
Mm-hmm.
Has happened before. Then properties become worthless if you have to pay too much tax.
Mm-hmm. But today you can't really own anything in Russia if you're from the West.
Well, I don't know precisely, but I have some Russian bonds. They still paid interest.
Mm-hmm.
But this is what I said. If you were Russian and wealthy, you don't want to have all your assets in Russia. The Russians were smart; they had assets overseas, but assets overseas they went and froze them. To freeze your assets and to take them away is about the same.
That's true. That's very true. But I mean, what about then just sort of spreading your investments into various different geographically focused ETFs?
Yes, but if you all hold them in England, or you hold them through a custodian in America or through a custodian in Switzerland, and they sanction you, it doesn't help you.
Mm-hmm.
What I want to say is you should go and buy some properties, I don't know, in Vietnam, Thailand, Indonesia, Philippines, or wherever, and you should own some properties maybe in Canada, and some properties if you're in a Czech Republican citizen, then you want to own some properties in the Czech Republic.
And
you
when it comes to stocks,
diversify into the sovereign states.
Okay, so the same would be about securities. I should be buying Vietnamese securities through a Vietnamese broker and custodian. Okay.
But as I explained to you, it's not so easy to do for most people.
No.
But I happen to live in Asia, so I have some portfolio in Thailand. And because of my investments in Vietnam, I have investments in Vietnam directly. I have some investments in Singapore and in Hong Kong and in Indonesia and in Switzerland.
So are there any, when we just speak about stocks, are there any markets now that you would sort of prefer over the others, or jurisdictions?
Yes, I have some preferences. The emerging markets, relative to the US, they topped out already in 2012. Mm-hmm. And relative to the US, they've been in bear markets until now. Mm-hmm. I think emerging markets are relatively good value. Mm-hmm. Very good value is Hong Kong. Now you will turn around and say, well, but Hong Kong has this and Hong Kong has that, and Hong Kong is not good, and so forth and so on. To that I say, this is at every bear market low, nothing looks good. Nothing looks good. At the beginning of the year, I wrote an article, a report about Turkey. Mm-hmm. And I said, because the devaluation of the currency, foreigners had sold Turkish stocks and they were very cheap. Then someone said, send me an email and said, how can you buy Turkish stocks? Everything is bad. I said, yes, that's why they're so cheap. Mm-hmm. Latin America now, Argentina is very cheap, both bonds and stocks. So there are pockets mm-hmm. of value. Chinese stocks, Hong Kong shares are cheap. Also, Singapore, Malaysia, Thailand, Indonesia is relatively inexpensive compared to the US, compared to European markets.
But I think what's the biggest cloud all over, sort of putting a shadow over all of these markets is inflation, because inflation will eventually eat into the purchasing power of the masses, which will then turn into lower earnings and lower dividends, corporate dividends.
I told you at the beginning what my view was about the world and about this period that was unattractive for investments. Mm-hmm. And you said I was gloomy. You asked me just now, what investments would I prefer? And so I answered this question. I didn't answer the question whether these markets were very attractive relative to the poor macro and geopolitical situation, because some of my friends who are highly educated, and one of them is already at the age of 35, a billionaire, US dollar. He thinks the US will go to war against China or against Russia. They're already at war. It's not about Ukraine, it's about Russia. They are at war with Russia.
So if we circle back to the very beginning, when you said that maybe we are at the stage of protecting what we have so we lose less relative to our neighbor. It's really about winning. It's about losing, being a sort of a lesser loser or a minor loser.
Yes. And do you know that, I mean, you say about inflation, I agree with you, but if you look, and I have books on the subject and lots of books, the best book on the subject of inflation is a book called The Economics of Inflation. This is now the most detailed analysis. Here you have it.
Yeah.
Bresciano Turoni. The author is called Constantino Bresciani Turoni. And he has different chapters about the impact of inflation on wages, on social conditions, on the foreign exchange market, on gold, and so forth and so on. It was written by someone who was an employee in the Ministry of Finance in Germany between 1918 and 1923. Most detailed account of inflation, the economics of inflation. This is a must read for anyone who wants to understand the impact of inflation on society and on share markets and so forth. If you believe in inflation, I can tell you, you're better off in stocks than in cash and in bonds. That's for sure.
That's for sure.
And you're better off in stocks than in real estate, because the first thing that happens in high inflation countries, they have rent control. Rent control is a complete disaster for homeowners.
Oh yeah, that's for sure, because your maintenance costs, they will actually go up through the roof, but your income is destroyed.
Not your rent.
Well, on that note, let me just say that I know you've put links and some mentioning of the whole books, and thanks for actually giving us a peek into I bet you a very small part of your bookshelves there. But thanks very much, and greatly appreciate it, and hopefully we'll be able to talk soon again. Thank you very much, sir.
I hope so. And I wish your viewers and you a wonderful festive season. And it's still politically acceptable to say Merry Christmas.
It is. Merry Christmas to you too, sir.